You were talking all about private investment flowing into different parts of entertainment. I mean, we're talking sports, media ventures. Perhaps no bigger example of this in recent weeks than the take-private deal of EA, $55 billion. What does a deal like that signify to you?
Well, it takes a big deal. First of all, a lot of capital concentration is how I would look at it. But overall, that space has a lot of momentum right now, a lot of capital velocity, but that's a big, significant valuation.
I think that's fair to say. Is it too high of a valuation?
I couldn't comment. I haven't seen the deal.
What about valuations in general when it comes to media and entertainment right now? I mean, there's a lot of stuff sloshing around. We're seeing consolidation, folks who want exposure to certain things, folks who want to get rid of exposure to certain things. Talk to us through that.
So what I would say is that we are seeing, I'll call them interesting, but some things are overvalued, in my opinion. I mean, if you look at sports right now, the valuations are sky high, and it's crushing the who can be buyers, and that's why they've opened that up to private equity.
Yeah.
I'd say on the media side, it's interesting. And why do I use that? Because it depends on what the formula of the IP is. So there are some things that have big audiences where you can quantify it pretty nicely and say, look, this has real potential. There are other things that have become sort of legacy, stagnant properties. And then you wonder, does this thing, what kind of juice does it really have? Do you have the team that can come in and buy it and give it some new life? So it's going to depend on what the nature of it is. And then, obviously, we had David Ellison speaking, and he's been pretty bold in what they're going to do in their space. And there's some really compelling IP plays there and big names that have been around for a while.
What do we need to know? I always think about, Tim and I always think about the Bloomberg audience, investors, the changing trends, the disruptors. David Ellison is a disruptor when it comes to media. What are the focal points that he's doing that you think investors should be taking note of?
I think the tech-first component is a big deal. I think that there was room for a lot of new efficiency, especially when you're building in streaming. It's a platform, and all the things he described, it was key for some consolidation. Having too many streaming platforms, that's smart. Also, just having the Oracle backbone makes too much sense for them. So that's a big synergy that they can bring to the table. And the things they're doing from a content acquisition perspective, he talked a lot about the intersection of sports. Anything you can do to bring sports to streaming is like the holy grail. And, UFC is an annual year-round event, whereas most sports have seasons. So he is 100% correct to do that.
As I mentioned, one of the hats you do wear is you're CIO of the Stewart Trust. And I'm wondering what your investment strategy is there with regard to media. Is it you also have DNA in private equity, so is it like a private equity approach where you buy it, then you improve operations and hopefully sell it for more? Or is it a permanent capital where you're like just buying and holding and you're taking those cash flows?
So we've done, in building our companies, we look at it with a little bit more patient approach. We're obviously not going to never say, oh, we won't sell this. But fundamentally, this is a family of entrepreneurs who want to build interesting platforms. So our companies like Lionforge and Oni Press are on upward trajectories. We've brought in some outside capital in the case of Lionforge to have more smart money at the table. But fundamentally, we want to, Lionforge's quietly stated mission is to be the next DreamWorks. And so kids and family is a big opportunity. We also look at where we can do intersections with sports because we think that has broad appeal as well, but in IP and doing things like shows and movies.
What do you mean by that? What's the opportunity there?
Because, if you look at, let's pick sport. If you look right now, there's a lot of opportunity in women's sports. You don't necessarily have to own the sports league. Why don't you make shows where you have rights to do things like cover the lives of the athletes? We're seeing it, Wrexham, for example, great show. It's doing really well, and it's rounding out how people view that. Well, if you want to access women's sports, for example, I think there's a more robust story to tell, telling stories about young girls playing volleyball and how do they get prepared. There's a huge audience for, I'll use volleyball as the example, 37 million people are the audience of women's volleyball under 18, between their families, the women who participate, et cetera, and the people want to watch it. there should be some great stories there to tell about that.
In case anybody doesn't know, women are pretty spectacular, so I'm just going to put it out there. So why not do more stuff?
Again, very entertaining,
amazing.
and it's just an area that hasn't been focused on. You know, we always talk about the big sports, which are robust, high valuations, et cetera, but there's all these other things that are coming up. And then you have, oh, by the way, you know, every 4 years you have the Olympics, which is like the culmination of whatever things you do. So there's a great thing you can do to really build around those things.
You know, it's interesting. I think we thought for a while, because there were so many streaming services and so many different platforms, that it was the era of the content creator. Is it still the era of the content creator versus those who deliver it?
Yes. I think that what has happened is now you look at things like YouTube, you look at things like microdramas, you look at, podcasts and all the sorts of things. You have an ability now and different platforms to create an audience around something new. So we have a show that we're going to make the full series of. It is for young adults called Lost Links. It was on YouTube. The audience loved it. It was these little episodes, 1 and 5 minute episodes, but you have 2-3 million followers who are now clamoring to see a full series around such a concept. That's a de novo new thing that people want to see.
You are not based in Hollywood.
No.
You are based in Boston.
Yeah.
You're a Californian.
Yeah.
But you're in Boston.
Yeah.
Advantage, disadvantage?
Well,
doesn't matter?
I think so. First of all, because I work in the family office, I can exist. If I have a laptop and a cell phone, I can be anywhere and do a lot. And the stewards joke that I'm like Bosley. Sometimes I call in and make stuff happen. But being in Boston, we have a lot of GPs that we've invested in, and that it's a great market to be in. It's number one in healthcare and biotech.
You're talking about general partners?
Yeah,
okay.
Yeah. So from our alternatives investments, I mean, that's a great place to be. You're close to New York.
What portion of the portfolio is media then?
So media, it's hard to quantify, but I would say it's under 10%.
Oh, interesting.
Yeah.
Okay.
I mean, we've made big bets, but
but they're relatively.
Well, when Worldwide is your core holding, I probably overstated the media play.
So Worldwide is still is held as part of the.
Well, it's a $20+ billion company.
But that's included in the family office assets.
Correct.